we have Mr. Parvat Srinivas Reddy, the Managing Director at MTAR Technologies, joining us on the show right now. Hi, sir. Good to be speaking with you. Thanks so much for making time and speaking with us. To begin with, of late, we have heard about a lot more orders coming in, and for yourself as well, there have been a couple of these announcements that have been made. Talk to us about what's the order book right now, what's the pipeline looking like, and what's the expectation of getting more orders in the next 3 to 4 months of this year.
No, as we said earlier, by end of this year, we'll be crossing the closing order book should be close to about 1,400 to 1,500 crores. So we are on track with what we said earlier, and probably we will get more orders which are expected in clean energy and nuclear divisions and aerospace as well.
Has there been any delay in any kind of government orders because of lack of capex, lack of commitment which has come from government because of this election spending?
Not really. We don't. Most of our orders are from the nuclear division. As far as the NPCL is concerned, the budgets are pre-approved. So it's a matter of, I think, a few paperworks being cleared. Other than that, I don't think there is much of a delay in getting these orders through.
In last 6 months, how much have you got in terms of fresh order, and its percentage of your total order book? How much has come in last 6 months?
I don't have the exact number for last 6 months, but we have received a sizable orders, I think 400 to 450 crores. But the way we are looking at it, by another 3 months' time, we should be closing at about 1,400 crores plus in the order book position.
Okay. Can you just tell us a little bit more about your revenue projections? Because I understand in the recent quarters, it's sort of stagnated. Are you targeting any particular growth rates going forward? And can you tell us what is going to be the key levers of this growth?
We didn't stagnate in our growth. We had some deferment of shipments last year, but we are back on track completely this year, stabilizing on that front. So, as I said, we'll be crossing close to about 700 plus crores this year compared to 575 crores last year. And then we did mention that we are looking at a 20% growth rate moving forward as well.
So, Reddy, one of the problems or one of the blips that had impacted your performance was one of your clients, Bloom Energy, right? Because you had a huge concentration risk there. How are things materializing there?
Actually, the recent developments have been extremely good with a lot of orders coming in from Bloom Energy. They also received huge orders from their own clients. The only reason was the change of product that we discussed earlier. Other than that, we are back on track. In fact, we'll be doing a lot higher revenue moving forward next year. And we've also diversified into a number of other MNC clients over the last 1.5 to 2 years. Where we have done a lot of first articles and we have been qualified. So we have also diversified into various other customers in different segments at this point of time.
So help me understand, what kind of revenue contribution are you expecting from Bloom Energy given the new orders that you talked about in FY25 or rather FY26 now? And what are you expecting from some of the new clients? What's going to be the split of revenue contribution?
So we're doing mostly about 65% earlier, but the way the Bloom Energy orders are growing, we should be around, and the other customer revenues are growing up, we should be around 50 to 55% with Bloom, and the rest should be the other customers.
Okay, and what about the EBITDA margin of the recent orders? Are they coming in at a healthy margin rate, or there has been a bit of a shift in the pricing power? What's been the expectation of EBITDA margins from here on?
As we said earlier, current year we're looking at about 20 to 21%, but next year our margin should improve to about 24%. We are on track with that, and also on the revenue growth as well. So there has not been any kind of price reductions or anything like that. We have been investing a lot for the future growth in the current year, and we should have better EBITDA margins moving forward next year.
Keep talking about defense with you, but I think the part of the pie that we usually miss is your focus on clean energy as well. And I understand you're doing quite a bit as far as the fuel cell space is concerned. Could you talk to me about what next is lined up in terms of technologies? Are you, let's say, partnering with any major tech player, or are you getting an order from an established player? What's the way forward for your clean energy segment?
So we're looking at number of companies. See, still except for Bloom Energy, if you look at it in this particular space, they are yet to develop their products and for MTAR to get involved at this point of time. But we are looking at a few companies. As and when it happens, then obviously we'll let all of you know about it.
Okay. At what rate do you expect in FY25 your clean energy business will grow?
See, FY25 already close to FY25. I mean, we're almost done with it, but we're looking at clean energy probably around 60% this year, and then next year we're going to grow even much higher, but the revenues from other segments are going to grow as well. So that's why I said we are looking at about 55% in clean energy, and the rest the other different segments that we are looking at, because nuclear division is also looking very well for next year.
On that note, we let you go. Appreciate you making time and clarifying all those doubts. So that's the latest coming in. The split between Bloom Energy versus the rest of the players is likely to be 50-50, and things looking on the upside.
If you like this video, then like, share and subscribe to ET Now.